I'm Jack Stevens and I'm one of the co-founders of EdStart, and we're an interesting alternative finance model that is looking at funding just one particular thing, which is education. So as a platform, our mission is to help people pay for education in a really simple and easy to use way. So what we find sort of in our space is that for a lot of Australians, in particular families and multi-child families, one of the biggest investments that they're making is in their kids' education. And you have a situation where 1 in 3 Australians are now sending their kids to a private school, some form of fee-paying school, and that is a really significant cost or investment that people are making in their kids. Now, when you look around at options, most of those big chunky investments that people make, house, car, boat, shares, business, etc., there's a whole range of different funding solutions, financing solutions to help with that. There's not really for this major cost, and we at EdStart have developed a platform to help it make it really simple and easy for people to fund that cost with our completely online low-cost process. So that's a bit of an overview of EdStart and how we fit in. Just diving into that a little bit further, when you look at funding the cost of education, and we're particularly talking about private schools here, parents, families generally have a few different ways of going about that. So you have, for a chunk of families, that they've got sufficient disposable income to go and pay for those fees as and when they're due, and that's about 50% of the population as we understand. The remainder are really relying on some sort of other option to fund it. So that might be drawing down on savings or investments, selling off a property or some other asset to fund this cost. And there's also other things like drawing down on a mortgage, for example, which some people do have access to. So accessing the equity that might be available in a home loan facility, drawing that back to be able to fund particularly really expensive years of school fees, and then maybe paying that back over a longer period. So where EdStart fits in is a different product. It sits outside of the more traditional options that people might have available, certainly those that might be available from a bank, etc. And we sit somewhere in the middle. So we offer a flexible credit line style of product. It's an unsecured facility, and it means that families could pay for, say, 6 years of high school over an 8 or a 10-year period. So it has a fixed term, but it's spreading out those fees and making them more manageable just within the household family budget.